The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here on this 7th day of November. One day before the election. We're going to talk about some of that right now. Dow's up 308 at 18,197. S&P is up 40 at 2125. The comp index is up 110 at 5,157. We've got some interesting things here because gold is down. Let me just check. I think it's $20. Let me just double check on that for the latest. Gold is down. Disappeared. Gold. Right there. Down $23 at $12.61. You've got some interesting things going on right now. You've got the dollar. Look at the dollar. The dollar is having a beautiful day up at 97.83, up 77 cents. That peak D at 99.12 on the 25th of October saw a slide down to the high 96s. Now you're up over a point, and this is from the low. And this is going to be very important because you've got a peak D in the weekly chart, and that monthly I still am expecting 100.52 or higher for leg D in the monthly chart over the coming weeks and maybe months, but I'm expecting it. All right, let's go on. We've got crude oil down here. Questions about crude oil, of course. Will crude oil make some kind of a low here? You know, the way the dollar's acting, the way everything's acting, I'm inclined to think that at this particular stage, crude oil, that weekly chart, last week's high in the high 48s and then the low in the 43s, that was a huge move down. And it makes it incumbent upon crude oil this week to have a push. It's at 44.23, up 16 cents. Not good enough. It really needs to break over both the 9-period exponential moving average and the 200-period simple moving average in the 46.20s and 46.50s to show some kind of inner strength. And at this particular point, it really isn't showing that. For all of those that have asked me about crude oil, could I look at it? I have to tell you, I just don't see anything yet in crude oil. And with the market up so strongly today, I would have anticipated that if there was going to be a sustained move that wasn't just the news-related move over the weekend, then we would be looking at something that had crude oil rallying as well. So I'll try to put the whole thing together, but let's just go on and finish up here because we've got bonds, and you would expect as well here in the bonds that at 130.82, down 92 cents, with yields rallying, that should have put some pressure on the market. So this is going to be really interesting to see how do the bonds relate to Wednesday's official first day of the president-elect, whoever that is. And that would be not the president-elect in the two-party election process right at this moment, but it would be the president-elect as a finality, and that's really what we're going to be looking at in the stock market. We'll get to that in a moment. I also want to just do a couple of things, get out of the way some of the questions that were asked. A couple of questions over the weekend, but I am dealing with them right now. But one question I was trying to answer, I got it on Friday. I didn't answer it on Friday because I ran out of time. I wasn't really going to answer it as a fundamental answer, but as a purely technical answer. But I got it again. Now I've got it as this person didn't know that they were now giving it to me in a better medium. And that question is, hi, Basil, could you go over where you think the euro and pound are headed? The FXE seems like a natural short since the EU will be bankrupt with UK oil revenue, or the ECB will just extend QE like before. World War II in Germany, like before World War II in Germany, right? That's when the Deutsche Mark went to something like 46 billion to the dollar. I mean, it was just people carried wheelbarrows worth of money. Can the ECB keep it up? Keep up its UK bond selling? Will the ECB's EU currency, the euro currency war on the BOE UK continue, and North Sea oil makes the UK asset rich like the Saudis. North Sea oil makes the EU ECB asset poor. How long do you think this currency bond denominated war can continue? Okay. So, Warren, I'm listening, Denver. Those are fantastic questions. Let me just try to answer it on purely technical basis, because these are really economist questions. That's not what I am, for sure. So I'm going to do something a little differently. Within the context of what we're looking at, I'm going to go to the FXE. That's the trading vehicle for the euro, the currency shares Euro Trust. And all I'm going to do, I did this before. I seem to have lost that pattern. I'm going to draw it one more time. You'll know that I've drawn it in before, because it's a pattern that I always draw. It is the lowercase h in the Chapman wave. If you got my CD introducing the Chapman wave methodology, you'll know that that's a part of what I look at. It's called the dreaded H. And then the H goes to an M formation, and that is in chapter 17, slide 332 and onwards. Couple of very, very important aspects that we're looking at here. On the weekly chart, if you look at this, you've got a trend line. And I love to draw these trend lines. I make them just as simple as I can. You can make them complex. I'm very visual, and I tend to treat things as they are. Look, you're taking the high of the weekly chart of the FXE, which is the currency share Euro Trust. It's at 112.90 on the week of the 6th of May of 2016. Pulls back sharply and comes back down just under 107, and then has a really nice bounce into the 110s. Stops dead right at 110.72 on the 19th of August. And then there are a series of 2 candles and then 3 candles, all of which get repelled at this trend line. So what do? In the Chapman wave methodology, I tend to make that green, and then I quickly snap on another little mini channel, and I look for the most obvious places to me. That's usually the bodies of the candle. That's where I do use the body of the candle, and I turn that into a red color. And then what that says is, I keep that green, and I turn this one into a red color. Okay. And what that says is, can I change it again? I didn't mean to say that. I was just trying to do 2 things at once. That is the inside track repellent zone. And that would say that the FXE from now on, this week 108.40, next week's about 108.22. That's the resistance area. And if there's a chance to break above it, it actually has to go way above it, and it has to go into the 109.20s, 109.30s. And actually has to close there. Why? Because all of a sudden you've broken the severe inside track, Chapman wave inside track repellent zone, and you've created something new because you've opened the upside. And that's why I make it green. The MACD is very negative. Stochastic is trying to rally off 20%, 25% went off the 20% level. So 2 things are happening. One is I'm able to draw a channel. And the other thing is I can do another channel right here and say, great, now I've got myself a very clear set of parameters. So I'll talk about parameters, and then I'll try to relate it to what I'm seeing, and I'll talk about it in relation to the charts themselves. Dow's up 304. S&P is up 40. Dow's up Tiger Technicians Hour. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. So the reason why I want to draw those trend lines on the FXE trading at 107.34 down $1.01 is because there's strong resistance, and I like to see where that resistance is. There is strong support, and I want to see what that support is. And in this particular instance, I can do it on the daily chart as well. The daily chart says right at about here. There's very strong resistance in the 108.43 to the 108.65 area. We've made a peak C, and the history of this pattern so far has been it's gone to the third highest peak, which is peak C, and it's gone to peak C minus, and then rolled over and gone to lower lows. So as I'm looking at it right now, my thinking here is that the FXE is going to run out of steam very quickly. The best it can do is actually make another arch formation, like the third arch. We saw that in the 120-minute chart. Remember, I was talking about that as a wave 5, Chapman wave 5, which we did on Friday at 17.883. Huge move up, and we've gone right into exactly the same thing here in the 120-minute chart of the Dow. There's the Chapman wave inside track resistance, repellent area. I think we're going to have a lot of resistance right now, and I just showed the, what was it, the 3-minute chart, or 2-minute chart? Which one did I show? The 2-minute chart at a peak E, and the 10-minute E mini chart at a peak E, a leg E, and the 5-minute right here, a 5-minute cash chart in a leg D, probably about to pull back. There's that arching over in all the technicals. All right, so that's the pattern that we're looking at. I want to just demonstrate the power of this resistance area. But more likely than not, we're going to make lower lows and lower highs. As I see it at this particular point, things can change, but that's what I'm seeing. That's the FXE, and the next question was the FXB, and the FXB is the British pound. I would prefer, I've done the notations and everything, but I prefer to go to the continuous contract of the British pound. And that British, wow, Brexit was not a good thing, huh? Look. We've broken way below the low that was made in January of 2009 of 1.3283 after the peak G monthly top back in 2007. And now we're going to lower lows. This is very important because the stochastic is attempting at 8% to try to find some support. I think that the British pound might be able to bounce from 1.24 to 1.32-ish area, but there's a chance it just might make another H pattern. This is a very delicate moment. So, Warren, I'm just going to say I can't get into all the fundamentals. but I can't get into the nitty-gritties of the technicals. And as far as I'm concerned, there is every indication that the dollar is still attempting to go to all-time highs. It's at 97.81. We're only talking about less than 3 points. Less than 3 points shouldn't be a big deal for the dollar because currencies tend to stay in a trajectory for a long time. Okay, so that's what I'm looking at there. So, and then the next question was a really good question about the S&P. What was the question here again? The 9-month cycle, 211.16 bottom corresponds to this week in November. And you're talking about the S&P. Well, I'll show you something very interesting. Okay, now I can go to the nitty-gritties of what I wanted to talk about. So this is a trough F in the daily chart with a very strong move to the upside. The weekly chart had more than a one-to-one extension to the downside. The stochastic finally is in the 18% area, attempting to find some support. The MACD is flattening out. And that says to me, this is just such a very important period for many reasons. I'm going to first of all talk technically, and then I'm going to talk politically. But I want to first of all say, my monthly chart in the Dow and the S&P, that's the reason why I had that webinar a week ago, Wednesday. I was saying that there's a really good chance that we should be looking at a leg C and then a leg D in the S&P over the coming months. I'm in a buy mode, the S&P and the Dow and NDX 100 and the Qs are all in buy modes in their monthly charts. So that says to me something's going to happen to allow us to go to new highs. Got that out the way. Now, the other thing is, where do we stop? Now let me go to something that I'm going to talk about. Let me see if I can try my very best to talk about it in a very apolitical way. This is what I spoke about the other day. I mentioned it on Friday, and I said I don't want to really get into it other than I'm going to mention that number 5 of the political scenarios on the Clinton side said there is usually another shoe that drops just before the election, and in this case, probably from this camp, and that would be the Clinton camp. And today, and then last night, I only sent it this morning. I thought I already sent it. I said, from my webinar last week, look at number 5 in the Clinton column. This latest news came at a pivotal moment in the election. This is a market moment of relief, which might or might not be seen as political. But for the market, it is just an easing of the buildup of nervous tension. Look at the way the VIX has gone. The VIX has gone from the 23s to the 18s right now. That's a huge decline. It was a huge move up. And I said that the reason why I think the VIX is moving up is because it's buying insurance. But at that point, it had nothing really to do with the market. It had to do with what the market could do on Wednesday. Therefore, I had to treat it as an aberrational thing. And I sent a whole bunch of charts about the VIX to my subscribers over the weekend. I explained what I was looking at. I try to get into that if there's time. But let me just say that then I go on to say buildup of nervous tension. Perhaps the market could begin a more concerted rally if it holds into Wednesday. Whatever happens now is subsidiary to what could happen on Wednesday. And one of the charts that I did show was this. Where's the one with all the words? There. I showed this chart, and that's my 120-minute chart of the Dow, and that's the 120-minute chart of the volatility index. And you could just half close your eyes. Basically, what you want to be looking at is that the level of the volatility index did not meet the powerful move to the downside that you saw way back when the Dow went down to the 17,300s. I think that was in June. I believe it was June. Okay. So there was an aberrational aspect to it. Okay, that's number one. Number two is this oval pattern that's forming very often repels and goes away. They go away from one another for a little period. So that happened from last night into this morning. So those are the things that I was discussing. Now let's go to something that's even more important. If I want to just look at this chart right there, see, we've made a peaky. I'm going to put a down arrow right now, and I believe that we should be starting to see a little bit of a pullback here from the 21.19s. The high was 21.21, round number high. Lots of round numbers today. But we'll see a lot of support at the 21.18 to 21.16 area. That should be the real test of whether this is it for the market for the day. And now we just gently pull back, holding a pattern into tomorrow. What happens after this? Okay, so that's that. And I want to, the S&P, now, I have to get back into the politics of things. Within the context of markets, if there is a result that the market finds appealing on Wednesday, let's for a moment imagine that Hillary Clinton wins. She doesn't just sneak by; she actually wins, so that it's case closed. Then you've got to assess it. You've got to say, hey, wait a minute, IBB is up 9. And you remember, for my subscribers, what did I do this weekend? I showed you that we didn't actually buy it. I wanted to buy it, but this is a tough period. I've got a Chapman Wave 5 to the downside in the daily. I've made a point of that. We've got a bunch of things going on here. It almost made a left side, right side price time match exactly almost to the day. It's 1 day short. The weekly chart held a trend line support level, and I thought there could be a pretty darn good bounce, but we didn't play that. But I wanted to mention it. We'll talk about that when I get back, because it's part of the political process.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, so we're back, and now what I wanted to also show is in the IBB, which is the iShares NASDAQ Biotech ETF at 261.07, up 937. That's a 3.72% move. That's really a big move. This is a leg A, but I'm calling it a gray A. Now, this is going to be very important. Why? Because it'll fail if the Clinton doctrine of hitting home at the pharmaceuticals and the biotech area is going to be important to this market. So it'll come back. This is just maybe a retracement bounce. I'm still looking at if the 240 level goes, that the IBB, my target has been down right here, 220 to the low that was made at 207.48 back in April of 2014. That's my target. We had a fantastic short with a 111-point gain, and I completely missed the pop-up, and I tried to go into the short side as it turned around at that peak F at the top right there. 301.80, missed it, and just for some reason I just didn't get back in. But it's a 5 to the downside, Chapman Wave 5, and you expect a really strong bounce, and that's what we've got. Now, where do I think it's going to go? A lot depends on what happens over the week, but I can just tell you this: if it breaks at 261.32 right now, if it closes above 265, filling in that gap, then it will certainly try to tackle 270.29, the high of the 27th of October. If this market is, if this is it, if we're now in the new phase, you remember in my webinar, I spent a lot of time, where was it? Right here. Let me just show you something, if I can find it. Right over here. I discussed this as a possibility, just a possibility, that there were three terms back in the 1920s going to Hoover. 1928 to 1932 actually was 1929. That's when he took office for 8 months. The market ran up huge, 30-something%, made a top at 386. And now we've got Obama from 2008 to 12, Obama 2012 to 16. What's going to happen from 2016 to 2020? And that's what I discussed in the webinar. I came to some conclusions. If certain things happen, what would happen if Trump won? Is that aberrational? Is that something that, in other words, two terms of Democrats, and then what if a Republican comes in, and if we do make a pretty major top, it doesn't have to be a 29 top, I'm talking about a pretty serious top, and then you get the Democrats back, that just doesn't make any common sense. It just, of course, a lot of things don't make common sense. So my thinking here is that there's a chance that Clinton does get back in and get in. And that'll be the third term. That'll culminate a whole bunch of things that are going on. That's just what the chart, I'm saying at this particular point, that's what the chart seemed to be indicating. A year ago, I'd said, before no one even thought about it, my indications said it'll be between Clinton and Trump. My thinking then was that Trump would actually win, as bizarre as it seemed at the time. I discussed this in my in that talk that I gave in the webinar, and I discussed that it really is a factor when you consider the ground game. That ground game is so important. And what I discussed was that within the context of markets, it's the nitty-gritties that make the difference. You can have polls do anything they want, but it's this. Actually, let me read this. For Clinton, political scenarios, intensive ground game helps turn out. That, I think, is imperative. I don't know if Trump's got the same kind of infrastructure there. So, number one, there is no infrastructure outreach for getting voters to the polls. Actually, I might be wrong. There is one, but I'm not sure it's as mature as the Democrat side. Number two, immediate relief market rally under normal conditions going into the last week of elections. Well, I had said, this is definitely not the case. Of course, today they just eradicated all that with a 300-point move up. And, we know why that happened. And then number two here for Trump is immediate decline. He is an unknown political contender. That's normally what you'd expect from the market. The market can handle uncertainty. It just hates uncertainty about uncertainty. And that's what would happen on Wednesday if Trump won. Number three, sector rotation, not too strong. The financials rally, they're running very strongly today. I'm going to get to Goldman Sachs in a minute. I had a question about that. But they weren't running going into this, which was very interesting. And that talks about interest rates as well, maybe rising. So the outcry for number four on the right side of Trump, the outcry was to get big money out of the elections. And no one that I know of has given Trump credit for doing just that. Even though he hasn't really self-funded everything, basically, look what he's raised, and look how many times he's been on television compared with Clinton. And that you have to actually give him huge credit for being a single-man show, And there are things you might not like or not, but you got to give credit where credit's due. How could he leapfrog the media like he did? That was an amazing thing to do. And no one seems to be acknowledging these points, the finance part of it and the actual the clout that he's developed by being able to garner television attention. Number 5, that's that shoe that drops. And number 5 for him is that he has shown a capacity to snatch defeat out of the deep draws of victory. And that would be my complaint all the time, that he created scenes that should never have been there. It was going to be tough enough as it is. And he just put his foot in his mouth over and over again. I mean, I just don't even understand why his thinking would go along those lines. So, let's see. Okay, in the Den, Tucker says, someone giving Trump some credit? Okay, market top must be in. Okay, and that's the other thing that I spoke about over a year and a half ago. What I said was, if I'm correct, and I spoke about this for 8 years, I said, I cannot understand why President Obama hasn't spoken about the stock market. He never talks about the stock market itself. He could have used it in 2008. It was like it was pulling teeth. He could barely drag it out of his mouth and say, the stock market has risen and your portfolios have improved. It's just something that he abhors. He does not like to talk about the market. And it's very interesting because the market, in some cases, tripled, in some cases, doubled in the period that he's been in office. Why not take credit for it? I just don't understand that. And then I'd say, wow, imagine if Bernie Sanders got in, the actual real anti-Wall Streeter. And of course, you can see the hypocrisy between Bernie Sanders talking about the banks, or Elizabeth Warren talking about her whole thesis is about the banks, and who are they? Who they right by? Hillary Clinton, the one who technically is, this is exactly diametrically opposed to what she's done with the banks. Isn't it funny how politics works? Now, and so my contention has been Bernie Sanders we'd see a Dow 60,000, 80,000 if that's the case. Anyway, that was just a joke. But what if Trump does get in, and then we make a major market top? After all, he kind of represents in many ways. He also doesn't talk much about the stock market, but you would think of him as a stock market guy, even though it's real estate. So this is very interesting, this market, as it stands. What would have happened if he had produced his taxes, right? Trump. Then there's a lot going on here, and there's a lot of play that can go into motion straight after the election. That's the reason why I thought without the election overhang, this kind of frees the market up a little bit, because that would have been a huge cloud over the market. So maybe things are looking up a little bit for the Clinton camp. So we'll talk about that in a moment. It would say that the Dow's up 317, S&P's up 41, and then we'll talk about Goldman Sachs. Isn't that appropriate? As we come back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks, we're back, and Goldman Sachs is the question at 180.60, up $4.68, up 2.66. This is a really strong breakout. Weekly chart is in leg C. Monthly chart is in leg A, acting very well, but the MACD has not yet crossed over positively, and the stochastic hasn't. So I've been talking about this for a while. Goldman Sachs is really back in play. I would think it's done this pattern before. So I don't know whether to call it an F or an A. I'm just saying that the pattern that I'm looking at in the MACD and the stochastic is very unusual in that it's made a very sharp downturn and a very sharp quick bounce, which was, of course, today. You wouldn't have thought that on Friday, but here we are. So what happens to Goldman Sachs is real simple. A close below 174 in the next 2 weeks would be quite negative and suggest that there's a timeout. Not negative for the daily. Weekly chart would just say a timeout and might have to test 172. But if by Wednesday to Thursday, Goldman Sachs is trading above 182.50, it's at 180.64 right now, I'm going to have to say to you that that is really good action. So that's Goldman Sachs. And if you look at the XLF, a nice move today, up 2.33%, going to a leg D. Leg D would start at 1996 and it's at 1995. It needs one more penny and it'll make leg D in the daily, but that's really not the issue. The issue is the BKX index, which it follows. BKX is really your benchmark, and that is saying, whoops, what is that saying? Leg D will be in the weekly chart above 10 on the 28th, the week of the 28th, 75.65, so it needs 75.66 for leg D. And I'm not sure what's going to happen here, because if it breaks above 75.65, initially I have to call it F, rather than call it the same as Goldman Sachs, rather than call it A. So let's just leave it at that. It's acting very well right now. I need to see where it is at Wednesday's close. That's the most important thing. All right, I've covered that. Vail. Oh, I have not looked at Vail. I did it during the break. Vail is in leg. This is the same thing. Is this F or is this brand new A? This is a stock that was trading at $4.86 on the 13th of September. Here we are a month and a half later, and BAP, it's at $7.06. Very nice move. And the weekly chart's leg C. Monthly chart is in leg B. Vail is acting extremely well. So there are areas there that are improving. Look at high-grade copper, HG. High-grade copper is spectacular. Oh, what a move today. You know, this is a very positive thing for the market. It wasn't before. Copper is acting very well. Interesting, huh? So as I was going through this over the weekend, I was kind of surprised at some things that I hadn't looked at that had done so well. Even KOL, which is the coal, which should have pulled back, is having a good move to leg D today. Leg GC in the weekly, leg B in the. The Vector Van Eck Vector's coal ETF dropped 90% during the Obama administration, And it's already, since January, maybe anticipating, I don't know what, but it's up 168%. That's a big move. So, okay. Next question is, X. Yeah, X is, I like this very much. I like X if it does certain things, but if you don't mind, I'm going to say US Steel is bumping into that resistance. Remember the Chapman Wave inside track resistance. But if you look at the SLX, which is the steel ETF, I've got the same spike to the upside today that either restarts. I'm going to have to call this leg C in the weekly chart. Steel is acting very well. And that was my question over the weekend. Why are we looking at steel and Alcoa? Look at this, Alcoa, up 2% at 25.75. Huge move from the 20.71 low. This is a 22% gain, isn't it? Something like that. Why is that doing so well? Why is copper doing so well? Something is being anticipated here, folks, that is really important. Look at gold. Gold is smashed to the downside 22 points. And that's what we've been talking about. Peak E in the daily. Pulling back, the GDX index was holding well. Now it's pulling back. It's down $1.28. Not good. It's going to be probably a peak C minus. So gold, I think, is going to suffer, at least in the shorter term. And I think the dollar is going to improve. Now, what is that saying about the market? It's saying, look, you can think about the market, but think about it have the patience, maybe. You could start some positions today, but have patience to say, on Wednesday, we'll have a clearer outlook. And if the clearer outlook says, market should go much higher with only a sideways consolidation, if there is a consolidation, rather than breaking down to Dow 16,700 instead of what I'd been talking about, the 17,500 as being quite important support. We got to the 17,700s the other day. This is a very important moment because the QQQ, they needed time. And they might not do the price. They might, it's a peak F, but we'll have to see. I can just make it real clear. If the PowerShares QQQ Trustees at 116.33 up 268, still in a sell mode in the daily, and the weekly chart has gone to a sell signal, but I might have to modify that if it starts trading in the 118 area. But at this particular point, it might be time more than price that we're looking at. So this is a period where don't get too carried away. Cash is a position. Start nibbling at things that you like. We nibbled at a stock today that is being very poor. It was spectacular. It was a gauge for the market for us on the way up and on the way down. And we nibbled at it, and we managed to get it pre-market at a nice price, and it's doing extremely well. So that's the way I want to do it. I want to slowly, we've got short positions. One of the shorts is still down 23% or 24%. And another one is maybe close, who knows, maybe close to being taken out. I don't know, because you have to just allow it to play out the way, the market tells you in sector by sector, stock by stock. So let's treat it that way. The VIX index, just for a moment, let me go to the VIX index. The VIX index plunged from a peak F probably a peak F in the daily, but certainly in the 120-minute chart where I was saying it was a peak F. We should get a pullback under any condition. I was saying to subscribers, how do we play it and what will it do? And then, of course, Comey's news came out, made everything redundant, all that work that you put in, and then boom, he does that. And I mean, that was a big thing. Now, you don't know the pressure that was put on Comey to be able to do this, but at the same time, whatever it is, it is. It's a done deal. Same as if President Obama had given Hillary Clinton or anyone a pardon. It's a done deal after that. So this is a very important period. A question in the den. Basil, your observation. Big VIX move up with mild SP decline, a warning of potential SPX pop big. Spot on, Basil. Oh, yeah, thank you. I'm proud of that analysis. I'm not proud of the fact that not during market hours, the news came out yesterday. I was getting ready to play the upside here, more as a trade than anything else. We've done it a little bit, but at the same time, some of the shorts that we have, I think, are going to be on Wednesday. I think they're going to prove to be the ones that are the weakest in the area. So thank you very much. Basil, that one's in. You like? Yeah. So let's do this. The volatility index. Tomorrow just might be a kind of a wait and see session. But if it's a wait and see session, if the volatility index drops into the 16s, remember the 15s is kind of neutral. Going to the 16s is still selling pressure. Most importantly, if on Wednesday morning at this time, if the volatility index is up in the 22s or higher, this market is coming right back down again. But if the market stays steady, the VIX drops into the 16s, we might be out of the woods for a short period based on that analysis. I'll be right back. Basil Chapman, Gaza 334.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
So let me just talk about two things. One is I got an email from Bob talking about options that he had in JO, which is the coffee ETN. He had a fantastic trade. Congratulations, Bob. And he's taken some off. It's in leg D right now. It's gone from the 21s to the 26 area. And the weekly is in leg F/C. It actually has more the look of a C, and the monthly is in leg C. This has been a spectacular move. So that's the one question. Another question I had was about ground game. Someone just sent me something. I guess the Dems have been to my house at least 10 times in the last 3 weeks. I'm a registered independent. No Republicans have been in our neighborhood, and it's in some place in New Hampshire, mostly Republican area. But you'd think they'd be out there, and they weren't. Yeah, that's interesting. I mean, I don't know. I'm just. This is my observations. And the other thing is, I was expecting that regardless of Clinton and Trump, that the market would respond, even if it responded with a big day like today, 200 points up, in this case, 300 points up, that we would then start to come back down. The reason being that with the overhang of the emails, that became a legal aspect that was really detrimental to any president's, leading. How can you lead, with that sitting over you? So Comey's announcement yesterday just immediately threw something completely different into the works. There's just no way that anyone, I would never have thought that he would do anything like this, because there were so many emails that he was supposedly, they said it'd take a month or more. So this is something that you can't foresee. And if you were, as some emails last week, towards the end of last week, I was getting saying, hey, there's a chance that with the VIX like this, we should be much, much higher. We should have a big snapback rally. That's absolutely true. But you realize that if Comey didn't do that yesterday, today might have been up a little bit, but it probably would have been a kind of a shaky day, just up a little bit to stop the 7 or 8 sessions of a down move that they keep talking about on the news in the S&P. So that was really something completely different. And what it does is it takes off the veil that was a cloud to a certain extent for if Clinton gets in. And that was really, to me, very important. That would have set a different precedent. We haven't had that before, all right? So that is different. So, I couldn't, how's anybody supposed to expect that? And not only that, expect it on a Sunday afternoon. So that's very, very different. But speaking to what my analysis over the weekend was that everything about it said the VIX should be in the 16s, the 15s, and we'd love to short the VIX. Well, of course, you didn't get a chance today because it dropped immediately. I mean, it would have been a tough short to be able to get a decent price. So that's really what I'm looking at this particular point. Not only that, I'm not sure I would have wanted to short it with 1 day to go for the election, because you're really highly vulnerable for something like that. But as a move to the downside, yeah, there's a chance that the VIX could start to move towards the 15s, 16s, 15s, and there would be buying pressure. If it holds it at Wednesday and it holding in the 1920 area or more, the selling will continue. As it stands right now, a lot means that in this particular instance, if Clinton does win, I think the market is free to move higher for a little bit longer before it starts to digest all the news. That's really what I'm thinking. After all, no, it doesn't get into the presidency until January. Cannot really do anything with Congress, etc., for months. So nothing actually is going to happen immediately. So that's my thinking, that there's still a digestive phase. We spoke about that in the Qs. I love the fact that the dollar is moving well. To me, that's saying that the dollar should move toward, I don't know if it'll make it, but I think it's going to move toward all-time highs. We'll see. And we're going to be watching gold very closely. So we've got our Dolly Vixie Bondi, watching it very closely over the coming days. Hey, have a great day. I'll be back tomorrow. Tomorrow's election. Just in case you didn't notice, tomorrow's election day. Have a great day. And stay tuned for all the great shows, your swimming lessons, etc.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.